All right, so let's dive into this deep dives, right, on the global economy.
Okay.
We're really zeroing in on this fascinating conversation between Bridgewater and GIC.
Yeah.
These are like the heavyweights
Absolutely.
of the investing world.
Yeah, giants, really.
And they got together in Singapore, actually, to celebrate a 30-year partnership.
Oh, wow.
Yeah, 30 years.
That's a long time.
It is. And they dove into some really, really thought-provoking topics.
Yeah.
About the future of, well, everything, right? Everything money.
Yeah. And what I found really interesting is they didn't just get into the weeds about specific trades or anything.
Right.
They kind of zoomed out to look at these bigger forces that are shaping the markets.
Yeah.
Like U.S. exceptionalism, what's happening with AI,
Okay.
and China's economic engine sputtering.
And this isn't just theoretical, right? This has huge real-world implications.
Oh, absolutely.
For investors like you.
Yeah.
I mean, how often do you hear that something like 70% of global equity investment flows into the U.S. market?
It's incredible.
That's mind-boggling.
It's a staggering number, and it really kind of begs the question,
Yeah.
what is it about the U.S. that's attracting all of this capital?
Right. And is it sustainable?
Exactly.
So let's start with this whole idea of U.S. exceptionalism.
Right.
Like we hear that phrase thrown around a lot.
We do.
But what does it actually mean in the context of the global economy?
So essentially, it suggests that the U.S. has this unique set of advantages that have allowed it to kind of outperform other economies for quite some time, particularly when you look at asset performance. Okay.
And these advantages often include things like having a large and really importantly, a domestic market,
Okay.
a culture that encourages innovation, risk-taking, and a government that's historically been adaptable to economic shifts.
Right. So we see this reflected in the stock market's performance.
Absolutely.
Right. I mean, U.S. companies, particularly in tech,
Yeah.
have had a phenomenal run
Yeah.
over the past decade.
Absolutely. And it's not just about, their dominance in their specific sectors,
Right.
but it's the ripple effect.
Right.
So you think about a company like Amazon, right? Not only have they kind of, revolutionized e-commerce,
Right.
but they've changed how we shop,
Of course.
how we consume information,
Yeah.
even how businesses operate. I mean,
Think about how many businesses rely on Amazon Web Services.
right.
It's incredible.
So it's that ripple effect you're talking about.
Absolutely.
And that success story, I imagine, attracts a ton of investment.
It does. It attracts massive investment into the U.S.
Well, it sounds like a self-perpetuating cycle.
Yeah.
Success breeds more investment, which leads to more success.
It can. The question is,
How long can that last?
is it sustainable?
Yeah.
Can the U.S. maintain this level of outperformance over the long run?
Right. What did these experts have to say about that?
So Jeffrey Jean Sapagi, who's the group CIO at GIC, he made a really interesting observation.
Okay.
He basically said that the market is already pricing in a lot of continued U.S. success.
Okay.
Maybe more than is realistic. He basically noted that current earnings growth expectations for U.S. companies are well beyond historical norms.
Wow.
And significantly higher than other countries.
That's a high bar to clear.
It is a high bar.
And it kind of brings us back to that 70% figure.
Exactly, right.
If that level of investment needs to keep coming in to just meet expectations.
Just stay level.
Where's it going to come from?
Yeah, where's that money going to come from 5, 10, 20 years down the line?
Right.
It's a really valid concern.
It's a question mark.
It is.
Yeah.
And while it's not impossible, it just highlights the pressure on U.S. companies to constantly outperform.
Yeah, to meet these really high expectations.
And then on top of that, you have the issue of the U.S. dollar.
Right.
Which further complicates the picture.
Because a strong dollar makes U.S. assets more appealing.
Exactly.
So it can fuel that cycle.
It can fuel that cycle, but
Whatever.
what happens if the dollar weakens?
What happens then?
That's when things could get a little dicey. Because if the dollar weakens, U.S. assets become less attractive.
Right.
Potentially leading to a decrease in foreign investment.
Right.
And this could then impact the U.S. economy, causing the dollar to weaken further.
So it becomes kind of a self-fulfilling prophecy.
It can become this downward spiral.
So we've got this potential fragility built into the market.
Yeah.
And this volatility of currency markets.
Right.
But there's this other thing looming.
Yeah.
Right, that we haven't even talked about yet.
The elephant in the room.
Which is?
The U.S. national debt.
The debt, exactly. How do they address that?
So Zumi, GIC's CIO for fixed income.
Okay.
She brought this up.
Okay.
And she said, look, it's not an immediate crisis,
Okay.
but you can't ignore the current level of deficit spending.
Right.
It's worrisome.
Okay.
And she made this really, I think, important point, which is that a big chunk of this spending is kind of baked in for the foreseeable future.
Meaning what?
Meaning that future administrations will have very limited flexibility to actually address the debt.
Wow.
So it's not just about whether the U.S. can maintain its economic edge, but also how it manages its finances to avoid a potential crisis down the road.
It's a lot to consider.
It is.
It's definitely a complex situation with a lot of moving parts.
It is.
And speaking of complex systems,
Yeah.
let's shift gears a little bit to another major force
Okay.
that's shaping the global economy. Artificial intelligence.
Right.
It's everywhere you look these days.
It really is.
From those crazy realistic deepfakes
I know.
to chat bots that can like write you a poem.
I know. It's amazing.
And the stock market is definitely paying attention.
Oh,
And
yeah.
some of these AI companies, their valuations are through the roof.
Yeah. Are we getting ahead of ourselves, and is it all hype?
Right. Are we in a hype cycle, or is this like the real deal?
Right.
Are we on the verge of like a true AI revolution?
Some true paradigm shift.
And luckily for us, Greg Jensen, co-CIO at Bridgewater, he actually spoke to this.
Oh, wow. Okay.
And I gotta say, his enthusiasm was contagious.
Really?
Oh, yeah. You could just tell he's been thinking about this for a long time.
Okay.
Long before it was like the buzzword, du jour.
Right, right. So what's his take?
So he talks about building systems that can basically systematize human intuition.
Okay. Systematize human intuition.
Yeah.
What does that even mean?
So Bridgewater,
Yeah.
they're known for their data-driven approach to investing, right?
Right. They analyze these massive data sets looking for patterns.
Exactly. Stuff that's not always obvious to us humans.
Right. And they've been doing this for decades.
Yeah, but Jensen thinks that AI can, supercharge it.
Take it to a whole new level.
Exactly. So it's not about replacing human intuition.
But enhancing it.
Exactly.
Making it more efficient, more scalable.
Yeah, like creating these systems that can learn and adapt
Right.
way faster than we can.
And uncover opportunities, manage risks in ways that we haven't even thought of yet.
It's like having a crystal ball, almost.
Right. But even with all of that,
Yeah.
he still cautions that it's early days.
Yeah, I keep saying early innings, early innings.
Okay, so what does he see as the biggest implication of all of this?
So he thinks the most profound impacts of AI
Yeah.
are going to be in things like healthcare, material science, even vaccine development.
So not just like writing better ad copy
Right.
or, making realistic images.
Right, it's much bigger than that.
It's about revolutionizing entire industries.
Exactly.
Okay, so give me an example.
Okay, so imagine AI helping us develop drugs faster
Okay.
by crunching through these massive data sets of biological information.
Yeah, yeah.
Or AI helping design materials
Okay.
with very specific properties.
Like strength and flexibility.
Yeah, or conductivity for use in everything from airplanes to renewable energy.
That's incredible.
Great.
It is, but it's also kind of a double-edged sword, isn't it?
That's what Jensen was saying.
Yeah.
He reminded us that AI is a tool.
Right.
And like any tool, it can be used for good or for bad.
So there's a potential for misuse here
Absolutely.
alongside the potential for all this progress.
Exactly. And he actually said it's easier to do destruction than production with AI.
Wow. So the same tech that could help cure diseases
Yeah.
could also be used to create even more sophisticated misinformation or autonomous weapons systems.
Which is a terrifying thought.
It is a sobering reminder that technological advancement isn't always positive.
Right. So how do we even begin to think about that?
I don't know. That's a big question.
And from a purely investment standpoint,
Yeah.
are there other challenges to consider?
Yeah, like what?
Like the massive investment required
Okay.
to actually use this technology effectively.
Right. It's not just about buying a chip and flipping a switch.
Exactly. You need to be able to make sense of all this data,
Adapt these models.
and that takes a lot of money,
It does. And expertise.
which not every company has.
Right. So it's not a level playing field.
Not at all.
So some companies will have an advantage
Definitely.
because they understand how to use these tools.
Right. And others will just get left behind.
Exactly. So for investors, it becomes about identifying those companies.
Ones who really get it.
The ones who have the vision, the expertise
And the resources.
to truly harness the power of AI,
It's about separating hype from reality.
which is never easy,
No, it's not.
especially in a field as complex and rapidly evolving as AI.
Exactly. So we've talked about the allure and potential pitfalls of U.S. exceptionalism.
Right.
We've explored the transformative power of AI.
Yeah.
And the need to separate hype from reality.
It's a lot to unpack.
It is.
And we haven't even touched on the elephant in the room yet.
China.
Exactly.
Feels like just yesterday, China was this unstoppable force.
Right. The engine of global growth.
Exactly. Everyone was trying to wrap their heads around these double-digit GDP numbers.
It was remarkable.
1 billion-plus consumers entering the global middle class.
It was a compelling story.
It was. What happened?
Well, Zumi from GIC, she had a really interesting take on this.
Yeah.
She said that the period from like 2000 to 2010, that was truly exceptional for China.
Okay.
Fueled by exports, a demographic boom, rapid urbanization.
It was like a golden age.
Yeah, it was this period of just incredible investment and expansion.
And we all saw the pictures, right?
Oh, yeah.
New cities, factories popping up everywhere.
It's like watching a time-lapse video.
But that pace of growth was never going to last forever.
No economy can sustain that indefinitely.
So even before the pandemic, things were already starting to slow down a bit.
Yeah, the growth was still there.
It was.
But it was slowing, and there was this underlying issue.
Which was?
Rising leverage.
They were taking on a lot of debt.
A lot of debt to maintain that growth.
And then COVID hit.
Yeah. Talk about a perfect storm.
Like everything that could go wrong did go wrong.
The real estate bubble, the lockdowns, zero COVID policies.
Right. It exposed a lot of the vulnerabilities.
It did, and I think it shook people up a bit. Because for so long, China seemed almost invincible.
Right. Unstoppable.
And then suddenly, it wasn't.
So where do things stand now? What's the outlook for China?
Well, Zumi really emphasized the real estate situation.
Okay.
She said it went from 26% of GDP in 2020 to just 17% in 2023.
That is a massive drop.
It is, and it has huge ripple effects.
Because so much is tied to real estate in China.
Exactly. Local governments, households, even industries like steel and cement.
Right. It's all connected.
So when real estate stumbles, the whole economy feels it.
It's like a house of cards.
In a way, yeah.
So what's the path forward? Can China recover from this?
That's the big question, and unfortunately there's no easy answer.
Right, if only.
But Zumi highlighted a couple of key challenges they're facing.
Okay, like what?
One is demographics. Their population is aging.
That's right. They're facing a shrinking workforce.
Exactly, and that has huge implications for economic growth.
It's hard to grow an economy when you have fewer people to do the work.
Exactly. And on top of that, they're trying to transition from an export-driven economy.
Right, to one that's more reliant on domestic consumption.
It's a massive undertaking.
It is, and it requires a lot of structural reform.
And let's not forget,
Yeah.
they've also got geopolitical tensions, trade wars.
Right, the pressure to be more self-sufficient.
It's a lot to handle.
It's a lot for any country to deal with.
It is, but remember what Greg Jensen said about market sentiment?
Okay.
There's a lot of pessimism baked into those valuations right now.
So it's possible the market is overreacting.
It's possible, and for investors who can stomach the volatility and have a long-term perspective.
There might be opportunities.
Exactly, but it's not without risk.
So how should investors approach China right now?
Carefully.
Right, of course, but specifically.
Zumi emphasized the importance of active management.
Okay.
And selectivity.
So not just throwing money at a broad China index fund.
Right. It's about doing your homework, understanding the specific risks.
And looking for companies that are well-positioned to navigate these challenges.
Companies with strong leadership, innovative business models.
Right, the ones that are adaptable.
Exactly.
So it's about being strategic, not shying away from China completely.
But also not just blindly following the herd.
It's about understanding the nuances.
And having a long-term vision.
Which really seems to be the theme of this whole conversation.
Yeah, it does, doesn't it?
Whether it's U.S. exceptionalism, the rise of AI, or the future of China.
It's about looking beyond the headlines.
Tuning out the noise.
And thinking about the big picture.
Asking ourselves, what's going to matter a decade from now?
What trends are here to stay?
And what kind of future are we investing in?
Because ultimately, we have a say in shaping that future.
We do. Through the choices we make, the companies we support.
It's about aligning our investments with our values.
And our vision of the world we want to see.
Exactly.
Well, on that note, a huge thank you to Bridgewater and GIC for this incredibly thought-provoking conversation.
Yeah, it was fascinating.
And to our listeners, as always, thank you for joining us on this deep dive.